What's up everybody? Welcome to the Stocks channel. My name is Cory, and Friday in the stock market we saw an intraday reversal, and now we are back to testing critical support. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also, please remember to smash that like button and help these videos reach 2,000 likes. Alright, Friday SPY was down 1.05% and it's coming back down to our very critical support level, which is going to be right around this area of 390 to 393. Now you can see Thursday we did get that bullish hammer candle off of the critical support, which was a bullish candle, and we were seeing follow through intraday. But as you can tell, there was just too many sellers at the 50 daily moving average, and there was a very strong rejection from that level. Now, the only positive news for the bulls after a very bearish candle like that is that the bulls did not lose their critical support at 390. Now, 390 is extremely critical, and as you can tell, we did see a high volume selling day, so there is the possibility we do break this support, and that is really going to open up the door for brand new lows, or at least retesting the previous low. So for that reason, you instantly need to get extremely risk off if we lose that support, because you could very likely start to see very sharp selling if that support is broken. And if you think about the psychology behind trading, there is going to be a lot of stop losses below this breakdown, and that is really going to speed up the selling to the downside, which is also going to invite more bears to continue to short into that weakness, driving the market down very quickly. So when I say waterfall wave of selling and I say capitulation, that means you're going to see the elevator down and it's going to happen very quickly. And we do have gaps to fill to the downside. Now, when you follow price action, you can never just assume anything is going to happen. You need the price action to prove it by breaking down below 390. The reason I say that is because there is the possibility that if the bulls make a stand here, we could see a strong bounce from this support and then get a continuation of that rally that started Friday morning. But that is only going to happen if we can bounce off 390 and break back over 393. And then, of course, you're still looking for that strong resistance at the 50 daily moving average at 401. So the bears are still in full control, but the bears will need to eat through this support level. And if there's just too many buy orders at that level, they may not be able to break down below it. If on Tuesday we gap down below that support, you need to be extremely risk off, because it is possible that level will become resistance, only giving the bears more confidence to drive it lower and close these gaps below. So just remember how critical this level at 390 is, and do not guess which direction it's going to go from that level. Wait for price action to confirm it, and that will be the break over 393 or the break down below 390. And of course, you can take on risk at this level, knowing that you need to instantly exit if it starts to break down. And do expect plenty of volatility going into the next couple of weeks, and typically September is a very volatile month as it is. So this is really completely normal price action given the seasonality. Now, if the bulls can somehow manage to bounce off support and get all the way back over 401, then you're looking for a test of the resistance trend line, which is going to be right around SPY 407. So take it day by day and understand you need a plan in both directions. Your trade plan should never assume the market has to move only in one direction. Know what you're going to do if SPY bounces off 390, and know exactly what you're going to do if SPY slices right through 390. On the NASDAQ 100 triple Qs, we were down 1.41% on Friday, and the triple Qs did lose that critical support at 296. So the next likely target for the triple Qs below this level is going to be that gap fill and support level right around 287. But normally when you lose a support level, you do want to see follow through. So if at any point the bulls can quickly bounce back over this level at 296, then you don't just want to assume we're going to 287. So you will need to watch that level very closely. Now, as you can tell, the triple Qs are very weak, and they did not even get back up to the 50 daily moving average, and we are getting rejected below this old support trend line, which is now starting to act as resistance. Obviously, that is extremely bearish, so you do need to be risk off, especially while we're below this level at 296. And if you're looking for the next level to take on risk, it is going to be down there right around 287. Now, if the bulls manage to get back over resistance at 302 and 306, then you'll be looking for resistance at the resistance trend line right around 310 to 311. In the Dow Jones, we were down 1.04%, and the Dow Jones closed below that support at 315 and right on top of the support trend line, which is going to be Dow Jones levels of about 312 to 313. Below 315 and a break below the support is likely going to be a very quick trip to fill this gap, which is right around 306.86. Below that gap fill, we can retest the low right around 300, and then of course we do still have a gap way down there right around 285. and it could be possible if the bear market returns. That is the gap that we're going to be trying to fill. Now we do have gaps to the upside and we are still sitting at support, so wait to get more bearish when we break down below 312. And the resistance will be 315 and this previous high right around 320. On the Russell 2000 IWM ETF, we were down 0.78%, and just like the SPY, we saw the Russell 2000 rejecting from below the 50 daily moving average and closing near a new low. This is obviously a bearish candle and we're very close to the critical support at 178, and if we lose 178, we also have our support trend line right around 176. Below these levels of support, it is going to be extremely bearish, which means we could retest the low, which is all the way down there right around 163. On the ARKK ETF, we were down 2.71%, and ARKK continues to get rejected from the resistance trend line, and it's likely coming back down to test support at $40. A failure of support at 40 will take us back down to retest the low at 36.5, and the bull breakout at this point is going to require a break back over 43, and then we could possibly try to close that gap at 47. This is very bearish and very risk off, especially while below 43. On the VIX, we were down 0.35%, which does seem like volatility was leaving the market, but what you can see here is that the VIX at one point was down all the way around 23 and then spiked all the way back up above 25. So while the VIX looks like it closed lower, it was much lower during the intraday session, and then we saw the reversal. So as I continue to tell you, it is going to remain a volatile market while the VIX is above 24, and we'll need the VIX to crush back below 24, and then we can get more bullish for the gap close at 21. On Bitcoin, we're currently down 0.6%, and Bitcoin does look like it's coming down to retest this support at 19,500, and as you can tell, we are still in a bearish trend of lower highs and lower lows. So if we break below support at 19,000, the next price target will be at 17,000. We're getting very close to what I believe is going to be the end of crypto winter. So if you are bullish in the long term, and I'm talking about holding for at least 2 years, you can continue to accumulate at these levels, but do understand we are in a downtrend, so you need to be prepared to buy at lower prices. We're not getting bullish until we can break back over 21,600, and then we can start talking about a retest of 25,000. On Amazon, we were down 0.24%, and Amazon is still holding that support at the 50 daily moving average. So overall, that is going to be a bullish indication and a level you can take on risk, which is going to be at 126. A failure of that support should easily close the gap at 122.8, and then we could continue lower from there if that level doesn't hold up as support to retest 115. We could stay risk on above this support or wait for the break back over 136, whatever fits you better, but do understand we are currently in a short-term downtrend. On Microsoft, we were down 1.67%, and Microsoft continues to look extremely weak ever since we broke down below 267, and it does look like we're very close to retesting that support right around 250. If 250 fails, we're coming back down to 242, and we need to get a retest of 267 and break back over that resistance to start looking more bullish and get back over the 50 daily moving average at 270. Nvidia was down 2.08%, and Nvidia continues to be a falling knife, closing well below the lower Bollinger Band, and the next likely support level is going to be down here right around 129. We do have a large gap to fill to the upside right around 150, but in the short term, it is a falling knife and there is no reason trying to catch a falling knife. If we can see price action, find a base of support and start to bounce, then we could start to take on risk, but right now we don't see any pivot, we just see a falling knife, so it's risk off until we at least get down to 129, and then we can see if the falling knife starts to slow down. Upside resistance from here is still going to be right around 145, but do not just assume we have to bounce and go test that, wait for the falling knife to slow down. On Tesla stock, we were down 2.51%, and Tesla continues to prove this looks like a double top, which is confirmed to take us all the way down to the gap close right around 251. We do have support right around the 50 daily moving average at 270, but if that level fails, look for the next leg lower at 258, and then below 258, we should fill that gap below at 250. We're not getting bullish until we can reclaim above resistance at 283, so it's risk off for more downside until Tesla can close back over 283. On Apple stock, we were down 1.36%, and Apple did lose the 50 daily moving average, which is right there at 157, so this is now risk off for a potential of retesting the next leg lower at 151. Above 157, you can take on risk, and the upside resistance will be 163 and the gap fill at 163.5. The financials were down 0.78% and losing the 50 daily moving average, and keep in mind there is a gap to fill to the downside, so while we're in the short-term downtrend, you will want to stay risk off. The industrials were down 0.97%, closing down below the 50 daily moving average, and also have a very large gap to fill to the downside, so this is definitely risk off while below the 50. The healthcare sector was down 1.44%, closing back down below 126, so we're risk off yet again, but there is the potential of finding support right around 124, but I do think you should be risk off while we're below 126. The energy sector was up 1.83%, bouncing off that support right around 78 and closing back over the 20 simple moving average. But do keep in mind it is possible this is a lower high before the energy sector goes for another leg lower, which could take it all the way down back into the 60s or at least closing the gap at 69. However, that will require confirmation in the price action and a break below the support trend line at 78, so you can stay bullish as long as we're above 78 to about 79. So jumping back over to the S&P 500, it is going to be a very interesting week next week because we're at critical support and we're in a very strong downtrend in the short term. And if the bulls can pivot from 390, this is still possibly going to be the higher low. But if we break 390, it is going to look like we're returning into the bear market. So there is no doubt in the short term, we are in a strong downtrend. So always respect the trend that you're currently in. And right now you're only taking on risk in SPY if we can hold above 390, and you are instantly getting risk off if we break below that level. And I do mean instantly because it could really start to speed up to the downside. Remember, I have the Stocks Channel Discord. If you're trying to become a better price action trader, you can get all of my intraday updates and analysis and trade with the Discord community. If you're interested in joining our Discord community, you can find out how to join by clicking on the link in the description of this video. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're interested in learning more about Bank or want to subscribe, just click on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.